Good afternoon. Thank you, everybody, for joining us today. My name is Charles Cox. I work at Longview Capital in New Orleans. We're a lower middle market private equity firm. Although we do not currently invest in sports, it's a strategy and thesis we're excited about, and we'll be building that out this year. But our esteemed panel here got a good collection of some pro athletes. I'll let you guess which one, not me, and some private equity investors who do have investments in sports. And so today we're going to talk about that landscape, the future, and the different diverse plays you can make in the sector. So I'll turn it over to my panel and introduce Zach. Please share a little bit about your background.
Thanks, Charles. Zach Diassi, Director of Business Development for LO3 Capital, SBIC fund based out of Nashville in Summit, New Jersey, where I live. Before I was at LO3 Capital, I had a little cup of coffee at Goldman Sachs doing private wealth, and 5 years ago retired from the NFL, and about 35 pounds ago as well. I was the team's long snapper for 13 years, and was fortunate enough to be there to be a part of 2 Super Bowl teams. Also represented the NFL Players Association and helped negotiate the last 2 CBAs, serving on the executive committee representing all players.
Yeah, thanks, Charles, for having me here. Matt Laporta. We have a sports advisory business that focuses on youth sports all the way to Major League sports, and it's really relevant to me. My background was I played Major League Baseball. I was fortunate enough to do that and as well represent the U.S. On the Olympic team in 2008. We didn't get a gold, we got bronze. My wife still gives me a hard time about that, but here we are. Just grateful to be on the panel.
Good afternoon. My name is Ford Perry. I'm the Chief Operating Officer for BMOC Capital. BMOC is a family office based here in Charleston, South Carolina. Moved here about 6 years ago from Charlotte, where the prior 20 plus years I spent in investment banking. The reason I'm on this panel is at BMOC, we have a pretty broad range of activities and investments we make in a variety of verticals. One of those is sports and entertainment. We'll talk more about that, but it's a vertical. Our investments there are predominantly centered around professional and amateur tennis. And then among our other verticals are our hospitality. This hotel is actually part of our portfolio. We're opening another here in Charleston within the next couple of months. Some restaurants and others. We have a big real estate development project going on here, a big philanthropic initiative. So there's a pretty wide range of things that we do, but sports is at the core of it, and we'll talk more about that.
Jonathan Perlman, Graham Sports and Entertainment Partner, is a lower middle market private equity fund focused exclusively on sports. Prior to GSE, I ran the soccer business for CAA Sports, the world's largest agency business. I turned down being a professional athlete because of the travel required. Just kidding. Just wasn't good enough. We focus on sports adjacencies at GSE, not teams or leagues, but the ecosystem that underlies sports, media, and entertainment.
Great, thank you. So I'll open it up with a question for Matt, but what has changed in the last 5 to 10 years that's made sports more attractive and accessible for private equity, and why is it a sought-after asset class?
Yeah, I think first, I never would have seen youth sports and private equity in the same sentence and being together. When I played, we certainly had travel teams, but not like you see it today. I think a lot of private equity groups now are starting to see that youth sports, there's a constant flow of young children playing sports, that there's always going to be talent there, always going to be people willing to pay to have their kid play on whatever travel team or sports league. And so I think that there's an opportunity to professionalize this, much like you would see soccer in Europe, where they have these academies. I think we're going to start seeing a lot more of that here in the States.
And Jonathan, maybe it'd be nice to hear kind of the genesis of Graham's strategy. It's a pure sports play. Like, how did they get the team together? What's kind of the longevity and strategy?
We have about 10 people on the team. Our differentiator, something a little different than most firms, is we are operator-led, we like to say. So I came from industry. Another managing partner spent a decade at the NFL, not playing in the NFL, I like to remind people, but working at the NFL, running their consumer practice. Our senior managing partner spent a decade plus running a business called Legends Hospitality, joint venture between the Yankees and Cowboys. And one of the Graham family members is also on the team, ownership of Team Sports, Philadelphia Union specifically. And then we've got the other guys that are doing the deal team, as we like to say. And so the thesis is really predicated on the fact that we come from industry, we understand industry from a deal flow perspective. That's helpful. From a value creation perspective, we're not going to write a check and show up at the next board meeting. We're going to be in there, get our hands dirty. And so it's a different perspective than some others are taking. And what we have found is in companies that we're talking to appreciate and like the fact that we come from this business. They don't want us in their business day to day. That's not our interest. But they like the fact that we're coming with a unique perspective. So, for example, talked about youth sports. We're doing a lot of work around youth sports. What we're seeing is there's a lot of interest in youth sports, a lot of subscale businesses, so it's a bit of a roll-up strategy. But when you can go in with a particular value proposition and say, we're going to do this, that, the other thing, we come from the sport, we understand the sport, it opens up a lot of doors.
And so what would be some of those kind of levers for value creation for something like youth sports that your firm could utilize?
Yeah, it's, I'm not going to give away all the secret sauce here, Charles, okay? But one of the things that we're doing, we're looking at youth soccer as a strategy here, and there is so much fragmentation, really across all sports, but youth soccer in particular. So one of the things we're looking at is partnering with one of the youth leagues, the most prominent youth league, to say there's a way that we can reimagine what you're doing. We have we have clubs, we have smaller leagues, we have tournaments that we have. A connection with one of the big leagues can really reshape the pyramid in the ecosystem. Our connection to the professional game, I work with a professional team in Italy. We've got the professional team here, can help us create a pathway for players. Doesn't mean everyone's going to turn professional, but there's this notion that you want to work towards something, and I think having those levers that we can pull help us grow what are these small businesses individually, but in aggregate can become quite big.
And Ford, I think it could be a good time to share, and we're talking about value creation. You're supporting a family office, and the way you look at your tennis assets, I think we talked about this a bunch last night, kind of as a passion asset. Maybe walk us through kind of the genesis of how you came across that business, what made it special, what are the goals for the family versus kind of traditional private equity, 5-year hold and sell.
Yeah, so a little bit of history just to set the table so people appreciate it. Our first tennis asset based here in Charleston, we own a women's WTA 500 tournament called the Credit One Charleston Open. Acquired that in 2018. We also own a club here that we have converted into a high-performance junior tennis academy. And so we're we both provide schooling and all-day performance coaching for students from 5th grade up through 12th grade. As we own that, an opportunity came up in 2022. One of the sort of rare assets in the tennis world, if you know tennis, there's sort of the 4 Grand Slams. The next level down are what are called Masters 1000s events. And there's 6 Masters 1000 combined, meaning men and women play at the same time in the world. So there's only 6 events. Happen to be 3 in the US, Indian Wells, Miami, and Cincinnati. The other events are in Monte Carlo, Paris, and Shanghai. So pretty stout sort of competition. The event in Cincinnati came for sale, and it was owned by the USTA. So it was a rare opportunity to acquire a Masters 1000 event in the US. We were Our principal at our family office, heavily invested and interested in tennis, passionate about the sport, and wanted to ensure that, number one, he protected this asset and kept the tournament in the U.S. But more importantly, everything we do within the family office, we think about as a multi-generational investment asset. And so as we screen that, we think about, well, what's the relative scarcity value of that asset? And this sort of hit all of those elements. It fit both the passion aspect of it for our principal, but also the scarcity value of it. Tennis, if you know it, between the WTA and the ATP is very structured, and the way they protect those, you can't just create new tournaments and fit in the calendar. So we had those relative value, elements of protection, but then what made this one particularly interesting was it was an underloved and underinvested asset within the tennis world because it was owned by the USTA, and that tournament was played 2 weeks before the US Open. The USTA kind of forgot about it. It was a warm-up event for the US Open, but it was one of 6 of the most important tournaments, one of the, I guess, really 10 most important tournaments of the year in the world. So we had an opportunity to come in and buy an underinvested asset, and our view was, if we treat this like a Grand Slam, if we invest in it like a Grand Slam, we'll get the return over time. And we have, our view of this is, again, a 30-plus year, maybe sort of perpetual asset. And we're permanent capital, so we're fortunate to be able to look at it in that way. But I think some of the core premises of how we think about this sports asset hold true for others thinking about investing in sports, which is first thinking about that scarcity value. Because I think there's a real risk now that everybody's perception is any sport asset is going to have value, and I think there's a real risk right now of a little bit of a bubble around some of those assets if you don't have that same level of protection.
So how do you, as a firm, kind of measure the success of the tournaments? Is it revenue, EBITDA? Is it ticket sales? Is it the community impact? I mean, how, year after year, how do you kind of measure and pat yourself on the back?
Yeah, it's a great question. Our measures of success are somewhat non-traditional. Of course, we care about financial performance. But in many respects, when we bought this asset, and given the fact that it was sort of underinvested, the first goal that our principal gave us was, I want this to be one of the best tournaments in the world. So that means a lot of things. One, we were going to have to make significant investments. We spent a long time debating if we were going to keep it in Cincinnati, and I'll talk about that later in terms of thinking through that issue. But we invested $260 million in the renovation of the facility itself. So generating a true return on that, we don't think about ROIs. What we did achieve in doing that over a couple of years, the first couple of years of owning it, which was our standard of return, is this year it was voted by the players as the ATP and WTA 1000 Tournament of the Year, which Indian Wells had won for 15 years straight. So for us, if we can achieve that and create something for players and fans, our view is if we make the upfront investment over a multi-decade period, the asset will just continue to appreciate. We care about cash flow because we want to be able to reinvest in it, but we have a very different lens on it.
Nice. And so, Zach, if you were, building a sports strategy for your firm, like where would you start first? Are there any sectors within sports that you find to be more attractive than others?
Well, as an SBIC lender, we're not looking to get minority positions in NFL teams, so let's be clear on that. But I think, right now the closest thing we have for sports tangential business that we have is a consumer product geared around weightlifting. And we're looking at businesses between 3 and 15 million, operating at 3 and 15 million EBITDA. But we're industry agnostic, and when we look at opportunities that are sports tangential, I often think about all these club sports coming online and how much these parents are willing to pay to give their kid the best opportunity to have a great experience in whatever sport that may be. And, as this whole sports private equity play sort of comes about, we want to be next to a business that has the ability to drive the revenue and be a part of the growth story. So, the sort of the ability for us to sort of analyze the cash flow of the business is important, but to be along with the ride for these businesses that are popping up is an exciting time. But yeah, we're excited to keep scouring for our next opportunity.
And then question for Matt and Jonathan. Just generally, if there's a PE firm that's a generalist, what advice would you give them as they're leaning into maybe a process going head to head against an investor with deep sports experience?
Yeah, I think if you're a private equity group that's looking to get into that space, I think you try to find, frankly, groups like ours that can help be an advisor to those transactions, help advise the private equity firm, maybe again at least get them going, help them build out that vertical for the firm, making industry contacts, and again, maybe if it's a new fund that you're looking to raise, being that we're circling a lot of investors that want to be in sports, but maybe they want to allocate to a fund rather than doing direct deals. That's something where our group at TrueUp we can help structure. We've done stuff like that in the past with folks looking to do youth baseball roll-ups. We've helped advise on them, raising a whole fund for that, and so that's probably I would think step one. And then as you grow and build from there, at that point you might not need us anymore, but hopefully we've done a great job for you and we're able to continue growing with that firm or vertical.
Yeah, I would say the first thing you do is call Matt. But if he's busy, just call me and we'll do the deal.
Oh, yeah.
I think, look, everything Matt said is right. I'm just curious, how many people out there are sports fans? Just raise your hand. Okay, I think that was everybody. So there's a certain visceral emotion that people have towards sports, particularly youth sports if you have a child that plays in it, college sports, your favorite team or alma mater, whatever it might be, the professional sport where you live. It's different than what we were talking about last night, injection molding or something else, right? Where you can just look at something on a pure EBITDA basis and you can do the math you need to do to figure out the return. Sports has a different meaning. There's something, sort of a more visceral reaction to it. And so my advice to anyone getting in the business in the space would be, you have to understand there are a lot of personalities involved. There's a lot of ego involved, certainly at the professional game, present company excluded, obviously. But you have to know what the business is, and I don't think you can look at it as you would look at a traditional business, because the model's a little bit different, and there's a big emotional component to it.
Maybe I would add to that along that theme. It's sort of what you were saying is there's a lot of constituents involved in your investment, whether you want them to be involved or not. So we had that in Cincinnati. We had to go through a process. Do we keep this tournament in Cincinnati? Do we move it? And that elicited some pretty emotional response. And so we weren't able to make that decision purely based on what we thought the best business decision was. The flip side of that is, I think, a real positive. And I think we underestimated at the time the value that a sanction or a franchise or a team has in its attachment to a community, and a little bit of our belief that we could just replicate that somewhere else. And we all see this with all of the franchises that consider movement, but I think the point you were hitting at is there's more variables in the sports investment equation than those we're often accustomed to or that you can necessarily profile in an Excel model.
And to take that a step further, I did a lot of my work previously in global football and soccer, and there was a lot of angst, I would say, particularly in the UK, with so many American owners. Over, I think it's at least half of the Premier League teams are now owned by Americans, and there was concern about it. And my philosophy on it was always the future of, you could say, English football, I think sport generally, is gross, overt American commercialism meets a deep, passionate understanding of what the game means to the people and the communities that it serves. And so there's going to be a need for institutional capital, private equity getting into sports. You're already seeing it. I don't think it's slowing down anytime soon. But you have to also understand that in a lot of ways, Cincinnati is a great example, they're community assets. You own it, but it's a community asset. So you have to balance there's a balancing act to do.
So given that these are specialized kind of niche passion assets, is the sourcing strategy vastly different than the rest of Graham's strategy, or how do you approach sourcing for sports assets?
Yeah, I mean, I can't speak to what we're part of a group from a family in Philadelphia. We operate completely separate. So, yeah, the answer is yes. They've been doing this for 40 years. On the manufacturing side, for us, it's a lot of relationships, as you can imagine. So whether that's on the youth side, whether that's on the venue side, we just know a lot of people in the industry. That's where I think our perspective of coming in operator-led is a differentiator, because we're able to pick up the phone. We hear something, we know we're one phone call away from a lot of people. So from a sourcing perspective, I think it's, this stuff isn't, good sports assets aren't just, they're not a dime a dozen. So it's really relationship-based.
And given that some of the financial profiles could be opaque, I mean, how do you think about sports multiples generally with respect to traditional private equity? I mean, is it always going to be higher, and that's just the nature of the asset class?
They're higher than I'd like them to be. Yeah. That's for sure. Because sports is now entering this moment with private equity, more institutional capital, there is a level of unsophistication, I'll say, that a lot of people have. It's not as if they've been in industries where private equity's been around for decades and decades and decades. So there's a lot of education that has to go from owner-operators, these businesses. I think it's going to keep growing. Again, I think there's a lot of tailwind behind sports as an asset class, especially as it's professionalizing. And that's the key, is that it's not about professional sports. It's about the professionalization of the sport that we're seeing happen. That will, I think it's going to, valuations are going to continue to rise. But there's a ton of opportunity in the value creation on these businesses that have been sort of mom and pops. And so I think valuations will rise, but what you can do with them now to a certain point, there's still a lot of runway.
And Matt, what's one assumption that you had going into sports investing, private equity fundraising that maybe was different once you got more involved in the industry?
Yeah, I would say, you hear a lot of talk about people wanting to be in sports and, throwing around big numbers. And then you realize, you talk more and more with people, they don't want to allocate, again, especially on some of the major league transactions that we've looked at, like they don't want to allocate as much capital as you thought, or they may even have thought, to that particular deal. So while they're excited to be part of the conversation, I also think it's, I think people don't realize like how much it really takes to be involved in a Major League Baseball or an NFL transaction. I mean, you're talking significant dollars, even as an LP. Mm-hmm. And so I think people just, again, underestimate how much capital is needed to be in sports. Now, again, youth sports is a different animal. It's, again, more of a buy and build strategy. You could get in at a little lower price point and grow it to something big and sell it to Jonathan.
I think we've seen it, right? I mean, everybody sees this, but in many respects, there's, I talked about scarcity value earlier and how important that is in evaluating that. And a lot of what we see in the headlines, right, are core leagues that have been around generationally, the NFL, the NBA, MLB, even the NHL. They're very cautious about creating new franchises. Likewise, though, we've seen a ton of investment in sport and people chasing assets and just wanting to put capital to work. And we're starting to see sort of second-tier leagues, startup leagues, competitive leagues get into primary new sports, whether that's pickleball or padel or, I don't know, whatever. And I think that's going to be really dangerous for some of those investors. Yeah. And then we haven't even touched on college and how that gets structured in youth sports. And so the drive towards it, I think you have to be careful in delineating between these highly protected, highly established leagues and then sort of the other leagues where you have to truly look at those on a true sort of cash flow based return, because that scarcity value and the protection of the franchises is less likely to be there.
And so, Matt, I think you recently helped support a capital raise for an MLB team. Maybe walk through just kind of the psychology of not having maybe a traditional valuation multiple, and is it just worth what someone will pay? I mean, how do you get buyers comfortable with that kind of calculation?
Yeah, I mean, it's kind of a wild process, to be honest with you, and they always take a little longer than you think. A lot of it, the valuation, so you have a couple groups out there like Sportico, and I think CNBC now is doing, valuations of teams, and so you kind of can get an idea of what the value of the team is from those, and it's pretty close. But you also can base your valuation off of the revenue, and it ranges. I mean, you can see them from 5 times revenue to 7 times, depending on if you're the Yankees or the Cubs, it might be 8 or 9 times, and so again, it varies. I think like any of the deals that you do in lower middle market, it helps to have an inside track to the current owner and have that relationship. That's something that we try to build with the owners of the teams in that manner, where it's like, look, when we have a client or somebody that wants to buy into the team, like there's more of a warm relationship. It's not just some random person that has the money to buy the team. So again, that deal took us quite a while. We thought we were all but done with it, and like any of the deals that you guys all work on, the family kind of towards the end of the deal decided not to sell because they think, and which I agree with, right? They think the team is going to be worth more after the new CBA that comes out in Major League Baseball. So, and then again, you also think through, and I'm sure Ford deals with this a lot on some of the family side of things, but there's a lot of family dynamics that go into these teams, right? It's not usually just one person. It's a family. It's a consortium of the family. I mean, you're seeing it right now, and this is all public information, so I'm not saying anything I shouldn't, but you see it right now with the San Diego Padres. I mean, they're going through a lot right now, and it's a family dynamic. The owner of the team had passed away, then left the team to the wife, and the brothers are running it, and so there's a lot that goes into these organizations, not just money. I think pride and ego also goes into them as well. And so you kind of act as emotional support to some of the folks that are wanting to invest or divest from the team.
Mm-hmm. And from a private equity perspective, you don't really, I guess, if you're investing in a sports franchise, it's not the same level of involvement as a youth sports franchise. Like, what are your rights? Because you really can't implement too much change. It sounds like in some respects you're just kind of along for the ride and you're not pulling the normal value creation levers through strategic improvements. What is that like for a PE firm investing in a sports franchise?
Well, I think from a PE perspective, a lot of these PE groups like, Arctos and Ares, those groups that want to be involved in professional sports at that level, they don't want a board seat. They don't really care about the rights. For them, it's just allocating capital to those organizations. I think for individual investors want rights. They want whatever. We want the suite. We want a couple tickets. We want to meet players. And I think those rights do come with, depending on how much capital you actually invest into the team. Mm-hmm. If you're only putting $25 million in, you're going to get a lot less than somebody that's writing a $250 million check for a team or buying the team. So again, I think every individual investor wants different things, and so you try to navigate that. We're working on a deal right now that's really interesting that has, it's a 7.6% share of a team that has 2 board seats and a ROFR to buy the team. And I think it's an incredible opportunity. I don't want to say it's undervalued, but I think you get a discount because you're buying it at a LP position. Mm-hmm. But the 2 board seats are really meaningful in my opinion, because now you can help, to your point, you can help shape the team, pull some different levers, give them ideas on how to make the organization better than what it is today.
Mm-hmm. And do you find that the ownership would be receptive to that input if it's a minority stake, or I know that depends on each team and situation, but
Yeah, it depends on each team, but if you have a board seat, you have a voice, right? Like the one is, has 11 board seats, and this opportunity has 2 of them. So you can, again, you don't have the overall say, but
Yeah.
you can help sway people. And the other thing that, and maybe you saw this with the tennis thing. Well, it sounded like you did. You mentioned it. These teams, you would think that they're worth billions of dollars, that they would be ran really efficiently, and you get in there and you go, oh my goodness, this is like a mom and pop shop here. You've got people that are, I don't know what they do, and they've been here for 30 years, and what do you do, sir? I don't know, tickets. It's amazing to me that you see these big organizations run like that, and so I think that's where a lot of opportunity is, and where you'll start to see some value creation similar to you guys in the tennis space.
I'd like to just expand on that. In 2010, when we were negotiating with the owners as a players association, we floated the idea of, we were trying to always think about how we're going to drive revenue because it's a shared revenue model. To your point, we floated the idea of bringing in equity partners or proper traditional, growth equity, private equity into the situation to help drive revenue higher. And the owners were adamantly against it in 2010. And the reason was that they had their systems in place. It's a family-owned business. They have their people running the organization, and it works, and revenue's growing. But we were of the mind as players that these seasoned private equity professionals could come in and help negotiate these media right deals, help drive revenue and ticket sales, and make the fan experience better and better. And at the time, they laughed us out of the room. But now look at what's going on in the NFL. They're inviting in these private equity professionals. They are going to sit at the table and negotiate these media right deals. They are going to think of every which way they can drive revenue higher and higher. So I think a lot of these family-owned, professional sports businesses have sort of capped out, and they're ready and willing to get a little bit of a payday, but also continue driving revenue north. And the players love it. And I'm sure that the private equity folks want to, add value as much as possible and get return on their investment.
Nice. Jonathan, we talked earlier this morning about the use of data and analytics with one of your companies. I think everyone's familiar with Moneyball, but what are some opportunities that private equity can utilize with data and analytics to enhance their companies?
I think this conversation's really interesting. One of the things I think has to be done is you separate, when you think about sports, there's a professional game, and then there's everything else, right? And so if you want to buy into a Major League Baseball team, call Matt and he'll find your way in. It's a fairly small sub-segment of people that can and want to do that. When you think about the rest of the sports, one of the areas that we're quite keen on is the data side of things. And both on-field, off-field, performance-wise, selling tickets, everything else, you see that at the highest levels of the game. I mentioned earlier I'm involved with a football team in Italy, a soccer team in Italy, and I think there's like 30 different data. The data science team has different inputs that they take when breaking down our team, breaking down the opposing team, when recruiting for other teams. 2 data teams, one at the club, one at the parent level, that's testing information back and forth. It's incredibly important. It's a good business. I think when you can see how that business can start to impact the recreational tennis player, the youth baseball player, and it can go down the line. We're not there quite yet, but I don't think we're far off. That's when these things get really, really interesting, and you figure, hey, I'm not an expert in the sport, but I can help my child. I'm a middle-aged tennis player, and I want to get better. I want to get better at golf, and now you can golf indoors in a simulator, and through AI, it can tell you, you don't need to pay for the golf pro anymore. So I think that is kind of the next wave of what's going to happen, is how you take data and analytics outside of the professional game, and you can use it for whatever your passion is. I think there's going to be a lot of uptake on that. We're just not quite there yet.
Nice. And Matt and Zach, just would love to hear how actually being a pro athlete kind of prepared you for your
You're not going to ask
career.
me that question?
Super offended.
Chime in. But yeah, how did the, just actually being on the other side, being a pro athlete, how did that prepare and set you up for success in your current role as an investor?
I think it certainly teaches you that, especially in the lower middle market, it's a grind, but also perseverance is key. It's hard to find those deals and go out there day to day, and most of us here are business, do a lot of these networking events, but you embrace the grind when you get to that level, and and to get your success and get up to the professional leagues. I like to draw from that. In football, you get knocked down a lot, but you learn to pick yourself back up, and that sort of perseverance and drive prevails in my new career here. So that's very helpful.
Yeah, I would agree. I think, baseball, you're a Hall of Famer if you hit 3 out of 10, And so there's a ton of failure that goes into the game. I've experienced a ton of failure in baseball. But what it has taught me is just, again, to Zach's point, resiliency, right? Like, if there's something there that you want, like, you just keep going after it. And it's a daily thing, right? You learn to compartmentalize different things going on externally in your life, for good or bad, right? And you kind of focus on the task at hand. And that's how, I think you can continue to achieve success. That's how I feel like I've been able to make the transition, even though it's never easy. It's had its ups and downs. There's definitely challenging times post-baseball. But again, there's always going to be challenging times. And so I've just learned to keep pushing day after day, and, eventually, you'll get the result that you're looking for.
And Ford, back to your investment in tennis, given it's a passion asset, you've been very successful, and we talked about kind of the glamorous, rewarding part of sports. Do you see the family maybe going into another kind of sports industry with the same strategy?
We've looked. In fact, it's public, but in 2018, our principal was the runner-up in an attempt to acquire the Carolina Panthers. And so we've been deep into that process, and we've revisited some others. As a result, we get lots of things on our desk. They're sort of all a pass. Our mindset is more about we'll make one great investment as opposed to 10 pretty good investments. And so we feel like we were able to acquire a really unique tennis asset. We have gotten dissuaded from some of the other pro sports leagues. One of the advantages to owning a tennis sanction is you don't have any players to, ruin your reputation. Like, you're part of a broader league. And so, owning sports teams is really difficult. Regardless of whether you're a good owner or bad owner, there's so many other factors that can influence you reputationally. And so I think we'll always continue to look. We're never a closed door, but I think we really like the asset we own. We'll continue to invest in the tennis world, where we own enough assets now, 3 sanctions, that we have a lot of influence on, or at least in theory, we'd like to believe we have influence on sort of the direction of the tennis world, and that's where we'll invest our time.
And Jonathan, how do you guys think about your hold periods? Are they longer than kind of traditional private equity? I mean, what have you shared with your LPs?
Yeah, I mean, it's not one size fits all for us, I think. It's dependent on the market. It's dependent on the space we're in. There's some... I think there's a reputational question right now about private equity in sports, and so, I mean, that is effectively what we are, but, it's not to say, sometimes we're going to build something up pretty quickly and turn it around and sell it because there's an opportunity to get to scale and sort of offload, and there are other times when you got to look at things a little bit longer. We don't have the, I'd say, luxury of what Ford does, is to say there's evergreen capital, and you can think about an asset for 30 years. We're certainly not in that, but we want to do what's best for the business. And just a quick note on the youth sports side. We were talking earlier. I asked about sports fans. How many have kids, grandkids, whatever, that play sports or in the sports world? So, you see that the stuff costs a lot of money. We don't think there's enough value in return for the money that's being spent. So in our mind, if that means that we have to spend money, right, and maybe take a hit to EBITDA because we're going to provide better value, we think that's better for the business long term, that's something we'll do. So, we don't hold things forever, but we want to hold things for the right time and create a better business than when we invested in.
Nice. And I mean, sports, I think one reason why the industry is attracted to it, it's survived recessions, COVID, any bubble. Do you think that there could ever be a scenario to where private equity gets it wrong and there's a turnaround?
I don't think private equity's ever gotten anything wrong, right? I don't. Sure, there's definitely a possibility. Could get it wrong. Because of what we talked about earlier, the importance of sports in the community and what it means to people, I think sports is not going anywhere. The drama, I'm sure many people saw the game last night, right? The drama that is inherent in a sporting event is unlike any drama that could be written or created. As there is more and more artificial intelligence and everything else going on in the world, I think we're not necessarily retreating, we're seeking out sport as something that is real and is happening in real time. So I think, I'm not saying private equity can't get it wrong by any stretch of the imagination, but I don't see sport as an asset class going anywhere anytime soon.
And how does the lending universe look at sports assets? Or do they lean in because they're not traditional multiples? And I'm just curious if they have an appetite to maybe over-lever these compared to a traditional injection molding company.
Potentially, Zach, I'm curious what you think on it, but I will say I think it's, you have to understand the core of what the business is. There are times when their cash flowing is not there to lever it to certain pieces, and there are times when it absolutely is right. So I think the fundamental, we get a little blinded perhaps by the glamour of sport and what it means and, the red carpet, so to speak. But at the end of the day, we're looking for fundamentally good businesses. I'm not going to invest in a business because I like the sport. I enjoy the competition. Look for it to be a good business.
No, I mean, from lending lens, I think it's such an unknown sort of market so far, and there's a nuclear arms race to get in the private equity world. Any tangential sport around youth sports or minor league or et cetera, even this NIL play that's going on in college, private equity is trying to crack in. So from a lender standpoint, we'll let it play out and see how these businesses perform over time. But it is very, very exciting to watch. And to your point earlier, I think whether you're a lender or a growth equity professional, you want a piece of the action because sports brings some sort of magic that everyone can share and love in.
Yeah, and I just was going to say on the lending side, a lot of these teams and leagues they're actually capped on how much they could borrow. A lot of times it varies, but call it 20% on what you could be borrowing, based on what the valuation of the team might be. So, and then if you go over that, the leagues want to see you get back underneath that threshold, and so they'll kind of encourage you to do so. Either have more revenue or maybe look to LPs.
So when you bring one of these franchises to market, everybody would love to own a stake in a major league franchise. Like, what's your list look like? Is that a long list? How does that come about?
The list of LPs or the control buyer?
Investors, yeah.
Yeah, it's actually kind of I find it to be a nice thing because it's really just really focused, right? I think because I did spend time several years ago in the lower middle market and raising money in that. it's a broader pool of people. I think in sports, it's a little more narrow, and so you start to find the right people that are looking to allocate capital to sports transactions, and then you kind of start to bucket who wants, the major four sports, who wants the secondary sports, and we tend to stay away from any of the emerging leagues. I don't. We've looked at deals like E1, which is like this hydroplaning boat thing. We've looked at other ones, and you're just like, I don't know if I can get back. I don't know if I can back you and help you with this. It's just not in my wheelhouse.
Yeah. Great, thank you. Well, I learned a lot and had a good time, so thank you, panel. I appreciate it, and everybody give them a quick round of applause.